Hey everyone, NEO reported quarterly financial results on December 5th. So what I'm going to do in this video is review NEO's latest quarterly earnings statement. I'm going to use that to update my recommendation for NEO stock. Coming into these quarterly results, I had NEO stock rated as a hold. And so you're going to want to tune in to see if after reviewing the earnings results, if I'm upgrading, downgrading, or keeping NEO stock rated the way it was. So without further ado, let's jump into these quarterly financial results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So for NEO in the quarter Q3, they delivered 55,432 vehicles, consisting of 37,585 premium smart SUVs and 17,847 premium smart electric sedans. That represented an increase of 75% from the third quarter of 2022. That's excellent growth from a market that's seen a considerable slowdown here in 2023. NEO, remember, introduced several new models in the previous quarter and in the current quarter, and so that's helped boost sales. They also increased sales staff, which we'll talk about in a little bit, but whatever they've done, it looks like it's working and it's delivering growth for NEO above where the market is growing right now. So excellent delivery growth from NEO. So vehicle sales increased 46% from the third quarter of 2022. The reason the vehicle sales number is below the vehicle delivery number is because of pricing. Pricing determines total overall sales revenue, whereas deliveries is just the number of units delivered. Vehicle margin, I was impressed, came in at 11% in the third quarter of 2023. That was down from the 16.4% in the third quarter of 2022, but it was up significantly from the 6.2% in the second quarter of 2023. Management said that they'll increase their their vehicle margin in the double digits for the third quarter, and I was impressed to see them deliver on that promise. They've also said that the vehicle margin will grow again in the fourth quarter, so that remains to be seen. But if they can hit that target as well, that will be impressive growth for NEO, and double-digit vehicle margins are solid to be sure. Gross profit decreased by 12.2% from the third quarter of the previous year. That was mainly due to rising competition, rising cost of goods sold, and lower prices. Remember, there's been a price war in the electric vehicle space, and it's been more intense in China than it is even in any other region in the world. Competition is soaring. The number of providers in electric vehicles is increasing, and they're all increasing production, and so they're having to lower prices to sell the number of units that they have capacity to sell. And so given all of that, NEO improved the net loss on the bottom line by 10.8% from the third quarter of 2022. This was a mediocre increase in reducing the loss on the bottom line. Nevertheless, it was progress, and it's going in the right direction, although I would have liked to have seen better progress on this front. When you have sales growing by 46%, I would like to see that improve the bottom line by more than just 10.8%. But still, it's progress that they're moving forward in reducing the losses on the bottom line. Investors are growing impatient with NEO after several years of losing money on the bottom line. Investors keep asking, when is this company going to turn a profit? And it's not anytime soon. Thankfully, the company does have $6.2 billion in cash as of September 30th. So even though they are losing money on the bottom line, $624 million in the most recent quarter, they've got $6.2 billion in cash. So they've got plenty of quarters worth of cash to sustain this level of operation. And hopefully, by the time they even approach going out or running out of money, they've turned the corner on profitability. So we talked already about the NEO's third quarter, which ended on September 30th. Okay, so that didn't include anything from October and November. NEO management gave investors an update, however, on what happened in October and November since the quarterly financial statements were put together. NIO delivered 16,000 vehicles in October and 15,959 in November. So they've sustained about a 16,000 pace for October and November, and management forecasted they expect another 16,000 or so in December. A solid pace, right? Heading for a fourth quarter delivery number of 48,000 for now. The big news that surprised me coming out of this quarterly update was this manufacturing and asset acquisition. So on December 5th, the company entered into a definitive agreement with Anhui Jianghui Automotive Group and regarding the acquisition of certain manufacturing equipment and assets for a total consideration of approximately 3.16 billion renminbi. And so the company, which had been employing an outsourcing business model, outsourcing to this GAC, is now acquiring those assets and will begin producing in-house. They will begin producing in-house. Now, management saying by bringing production in-house, it's likely to improve their vehicle profit margin. That is, to be sure, it will improve the vehicle profit margin so long as they digest this acquisition effectively. But now you've invested a greater deal of capital in operating the business. And so, as management was saying that we're going to increase our profit margin, but now it looks like they're going to increase their profit margin because they're investing more capital into the business. They're becoming more capital intensive. And that's a change in a business model. That's a change in the business model, which is a bit curious. Now, they've grown to such a large scale, right? 48,000 units expected to be delivered in the fourth quarter. And so annualized, that would be roughly a 200,000 unit pace. So at this scale, I think it was time to start considering bringing production in-house. Although it's not going to be an easy transition. It's not always smooth to digest and change business model on the fly like this. So it's something to keep in mind. This move has the potential to improve its profitability if they can manage it effectively. It also has the potential to disrupt things, to disrupt the progress they've made so far. And it has the potential to become a mistake where a year from now, they come back to investors and say, we tried that manufacturing thing, didn't work out. We're going to sell this again, and we're going to go back to the outsourcing business model, which happens often with companies that try this move. So this is a big change. This is something that NIO stock investors should pay close attention to, something I will update you on as more information comes out from this acquisition, from the change in business model. I mentioned earlier, NIO has launched some new models, and on September 15th, they launched and started deliveries of a new SUV coupe on September 15th. Undoubtedly, that's helped boost sales, as new models often do. They generate enthusiasm and excitement from buyers, and they generate sales. So this is good to see. The company has launched several new models in 2023. They've really refreshed their cycle, their offerings to customers, and it looks like it is working so far. It has turned out to boost sales and to boost unit deliveries, which is good news for NIO stock investors. So NIO ranked first in the battery electric vehicle market segment, priced over 300,000 RMB in China, with a market share of a whopping 45% in Q3. They are the dominant player in cars priced above 300,000 RMB in China, electric vehicle cars priced above that, I should say. And that's always a good sign. You want to invest in companies that have the number one or number two market share in their respective industries, in their respective categories, because that leads to better profitability. It leads to better pricing power. It leads to better negotiating power. And it's all in all a good thing for investors. Okay, so now to update my recommendation on NEO stock. Coming into the quarter, I had the stock rated as a hold. It's now trading at a forward price to sales of 1.013. The valuation is down significantly from a peak of around a forward price to sales of 12 or 13. Still, I would have argued that the stock price should have never been this high to begin with. And in fact, I have been arguing that the stock price should never have been that high to begin with. I've been cautioning investors about NEO stock because it's expensive and because it's a lot of promise and potential, while little has been delivered in terms of improvement in profitability or approaching profitability on the bottom line. And so I will continue to put NEO stock as a hold, although it did make progress getting closer to the borderline of a hold and a buy. They did make progress in the quarter. The increase in vehicle deliveries, the progress towards the vehicle margin into double digit categories, and continued progress. Management said it's going to go closer to 20% in terms of vehicle margin. All those three signs were bullish for me. The one where I'm on the fence on, where I don't quite know yet if it's going to work out or not work out, is the decision to start manufacturing in-house. It has potential, but it also has risks. And so I'm not making a opinion on that just yet. I'm not saying whether or not it's good or bad. I'm just saying that it has potential to be really good. It also has the potential to be really bad for investors. It's just something that raised the risk profile for the company overall. So I'm keeping it as a hold. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.